Let's talk about SushiSwap. So you've heard of this crypto platform that has the potential to make some serious cash. But what actually is it? How does it work? And is it something legit that's worth paying attention to in the crypto space? Well, in this video, I'll be providing you with an in-depth look at everything you need to know about SushiSwap before you put a single dollar into the platform. Now, first off, what actually is SushiSwap? Well, you've kind of got two things that we're looking at here. You've got the SushiSwap platform and the Sushi token. These are two different things, but they're very interrelated. SushiSwap itself is a DEX or decentralized exchange that runs on Ethereum. And as we've seen in the last couple months here, it's becoming more and more apparent that these centralized exchanges, both for cryptocurrencies and for stock market investing, might not be the best places to trust. I mean, all of this power has led these guys to make some questionable decisions recently, and that is where SushiSwap comes in. With SushiSwap, like I said, they are an exchange. They're a place for you to buy and sell different cryptocurrencies, but no trust is required here because there is no centralized power making the decisions and governing SushiSwap. It's actually governed by the people who use it, which we'll get into in just a little bit. Now, in addition to this exchange where you can buy and sell different cryptocurrencies, they also do offer lending and borrowing where you can lend out your cryptocurrencies and receive an interest rate or borrow cryptocurrencies and pay a fee to do so. So now that you kind of get the gist of it, how does SushiSwap actually work? Well, your traditional brokerage, think of like your Robinhood, they operate on an order book system. So orders come in, orders go out, there are bids, there are asks, and these allow people to buy and sell different stocks on the Robinhood platform. Now with SushiSwap, there is no order book and there are instead what are called liquidity pools. Now, very big picture, how a liquidity pool works is that you put two different cryptocurrencies inside of this pool. You put 50% of one, 50% of the other. And then as the prices of these two cryptos change, people need to buy and sell them to kind of balance out the pool. Now, in order for these liquidity pools to work, there has to be a significant amount of liquidity. So there has to be a lot of crypto in the pool for it to actually function. This is where the Sushi token comes into play. So as a reward for contributing to the pools, SushiSwap decided to give out Sushi tokens to the people who were putting their crypto inside of the pool to generate that liquidity. Now, this worked so well that within just a few days, they had over $1 billion in assets within their different liquidity pools just by giving out this Sushi token. So basically, you got people contributing to the liquidity pools. They're getting Sushi tokens in return. You got people borrowing from the liquidity pools that are paying a fee into the pool, and then that fee is going in part to the people who put their money into the pool. It's basically like the banking system, except you just remove the bank and you put a big pool of crypto in the middle instead. Now, what's really interesting here is that the Sushi token is actually a governance token. And what that means is that if you hold Sushi, you get to actually help decide the future of the SushiSwap platform. How this works is there are different SIPs or SushiSwap improvement proposals that are proposed, and then you as the Sushi holder get to vote on this proposal in proportion to how many Sushi tokens you actually have. So the people using SushiSwap get the Sushi tokens, they get to vote on the decisions, and even if you don't participate in the SushiSwap platform, you can still buy these Sushi tokens if you think the platform is going to become more popular over time, because the more people that start using the platform, the more valuable, hypothetically, these Sushi tokens are going to become. But now the all-important question of, is SushiSwap actually legit? Well, if you log on to the platform, you're going to see some APYs that are in the hundreds of percents, if not thousands of percents, depending on when you actually log in. Now, anytime you see higher than average APYs or returns on your investments, you should be a little bit skeptical of how that's actually being generated. Now, on the one hand, it does make sense that when you remove banks from the equation, the returns for the people putting money into the liquidity pool should be higher than when there's that kind of middleman taking their cut of the transaction. But should they be going up to hundreds of percents, and is this actually sustainable? Well, there are a few big risks you should be thinking about if you want to put money into SushiSwap. The first of which is there is no FDIC or SIPC insurance on any of your crypto held in SushiSwap. This is going to be standard across any cryptocurrency exchange or platform. There is no kind of standardized insurance that these platforms do hold. So you're taking that risk of a full loss in the event that something actually happens to the platform if they're hacked or if it turns out to be a bit of a scam. You're also at risk of what is called an impermanent loss. If the value of the crypto that is in the pool fluctuates too much, then you're potentially subjecting yourself to another risk factor of loss. And then last, and this is a big risk factor, is that there's no guarantee that you're going to be able to withdraw your crypto when you want to, okay? And that's because with the lending and borrowing model that we're talking about here, if there are too many borrowers and not enough lenders putting money in, and say all of these borrowers are asking for money, that could restrict your ability to pull out from the pool if you wanted to. This could also happen in a panic if everybody decided they want to pull out of the pool at once. There might not be enough liquidity to satisfy all of that demand. So with any platform that you're thinking about putting money into, you need to look at the total liquidity available inside of that actual platform. At this point in time, SushiSwap has about $3.8 billion worth of liquidity, which is quite a bit when you compare it to some of the other platforms out there that are doing similar things. They've also been audited by some pretty reputable companies, so for now it does seem like they have enough liquidity to meet their needs, but like I said, if there was some kind of rush or panic where people wanted to all pull out at once, that could be a potential issue for you. Now, one other question that's important to ask here is, how is SushiSwap actually making money? Because they are in business, there are people behind this that are doing work on it, and they need to be getting paid. So how does that actually work? Well, every time new sushi tokens are created, 10% actually goes back to the development fund. This is supposed to be used to fund new projects and initiatives. However, there was some serious drama with the development fund back in September of 2020. See, at that point, the founder, Chef Nomi, actually pulled $14 million worth of sushi out of the development fund. This resulted in some serious backlash from the community who felt like he was just trying to cash out. Now, after a couple weeks, he did actually end up returning that $14 million back to the fund and stepping down from the project. But you do have to keep in mind that the development fund might not always be used in the way that you want it to, and SushiSwap does really rely on a constant stream of new people and new money coming into the platform in order to sustain itself. But if at this point you're sold, you want in, and you want to participate in SushiSwap, how do you actually do so? Well, like I said, there's two main ways you could participate. One, you could go through the SushiSwap platform and contribute to those liquidity pools and receive some rewards in the process. Additionally, if you were bullish on sushi and you thought that it was just going to increase in demand and people flooding into the platform over time, you could just buy these sushi tokens and hold on to those in the hopes that they would appreciate in value over time. Now, the best way to do both of those things is by using Coinbase, which is one of the biggest exchanges out there. You can buy your sushi tokens on the Coinbase platform, and then you'll also need to hook up your Coinbase account to your SushiSwap account if you want to participate in those liquidity pools. Now, I've got a link down below in the description where you can sign up for Coinbase and get a free $10 worth of crypto when you fund your account. So if you want to support the channel and use that link, you can find it down below. Now, the next thing you should do is check out this video over here where I dive deep into Goose Finance. Now, Goose Finance runs a pretty similar platform to Sushi in a lot of ways, but the APYs are even higher. We're talking thousands of percentage points for these liquidity pools. And they also add in a few extra dynamics, which are pretty cool. So make sure to check out that video and I'll see you over there.